So there are good. There are two reasons we're taking this USDCAD buy. Two good reasons. On 1 hour, there is a pattern formation on 1 hour here, and on 15 minutes, there's a trend breakout, which I'd like to call these two reasons confluence, and I think it's a good confluence enough for me to buy. Although there isn't much volume in the market right now, there isn't much volume, as you can see. Much activity is not happening. There are neither buyers nor sellers in the market. That's why the market is looking stagnant, and I think it's as a result of the NFP non-farm payroll that's coming out tomorrow. That's going to be released tomorrow. So traders are always mostly inactive, indecisive, waiting for what the news is going to say before they really trade the market. Let me just quickly show you why I'm taking this trade. What I just explained right now is the economic analysis. I call them fundamental analysis. This is a technical analysis. That's the pattern I saw here is a technical analysis, and the particular pattern I saw here is the head and shoulder. But in this case, the inverse head and shoulder. The head and shoulder normally is like this. Market goes up, then falls back, half somewhere here, and you see a rejection back to the upside, somewhere here, then rejects again, maintains this previous low, goes back up, but doesn't break the previous shoulder, stops here, then rejects again. Once it rejects and it takes out this level, takes out these previous lows, takes it out to somewhere here, you get, then we are expecting this particular market to fall down to this place. So in most cases, we wait for a retest of this low. This low becomes a resistance level, a support turn resistance. This level becomes a support turn resistance. So we're expecting it to retest that level. So long as it doesn't break the level, then we fall to the downside to complete this previous low. So yeah, this is an head and shoulder. So as you can see, this a head and shoulder. As you can see, the inverse, that's the reverse side of it, is what we are trading right now. That is what we call the inverse head and shoulder. That's what I saw. That's the exact pattern I saw. That one works somehow similar. See, like this. Market falls to this particular place, tries to rise, then falls back, breaks the previous low, goes back up, maintains that high, comes back again, doesn't get to the new low created halfway, and this is where the market is at currently. Yeah, this is where it is currently. So what happens in this place is we expect the market to shoot back up to this particular level. That's what we are expecting. So that's why we are trading it. We're expecting the market to shoot back up to this particular level to come and complete this full structure. That's complete the other body. So normally when you see market like this is called an inverse head and shoulder. So this place becomes a resistance, is a psychological level. Becomes a psychological level. This is the shoulder, the head, the shoulder, the necklines. So the neckline. The name is gotten from the structure of the body of a man. You understand? As you can see, imagine it standing, just like the other one I showed you. Standing, the head, the shoulder, and the neckline. So that's it. So whenever market prices comes back and takes out this neckline, that's this level here, comes back and takes out this psychological level here. So most times there is something you call risk entry, there's something you call confirmation entry. Sometimes while the market is still here at this particular level, some people would have entered expecting the market to shoot up. Okay, most times we wait for a confirmation, we wait for it to break this level. You get, after it breaks, we still don't enter yet. Wait for a retest here. That's a double confirmation. After the retest, then we enter. This will be our entry. Our stop loss will be somewhere here, and our TP will be targeting the previous high. So that's it. So that's exactly what we are trading in this place. The same pattern is what I saw. That's making me take this trade. Sometimes another thing you need to notice that sometimes the patterns are not always exactly in shape. I know always exactly in shape, like in this situation here. Let me put it out for you to see. If I use the line charts, you get to see it clearly. So you can see, right? You can see the market started falling from here, fell to this particular low. Most times these are manipulations. So as you can see, this is the main shoulder here, the neckline, the head, the shoulder, neckline. Then it breaks this level. See what happens here. Then it did a retest here. Again, this retest would have been our entry if I had seen this earlier. So let me switch it back to the candle in case you're not understanding this. So let me what I just drew up here, let me point it out for you to see clearly. So the market started falling from here, fell to this particular place. Most times these are manipulations, right? These are manipulations in the market. Then it returned back up to this place, then fell back again to this high, to this low, rejected. There was a rejection back up here to this previous high. He didn't take out this previous high, he stopped there, maintained it, then fell back to this low, we get, then pushed back up. Here it has finally broken this neckline that has been rejected here. It's been rejecting, so it finally broke it here to the upside, right? So after breaking to the upside, we are expecting this guy to go up, complete, get the full structure here, but then it gives us a confirmation entry with a retest here. So you get here. That's what I was saying. If I had seen this earlier, this would have been our entry. And I wasn't looking at the 1 hour time frame. I was stuck on the 15 minutes until I just had to switch to the 1 hour time frame. Then I saw this. So this would have been our entry. You get it? But since we missed it here, I saw another confirmation of on 15-minute time frame. That's why I took it. That's why I made our entry here at this particular place where I called the trade. So normally we are expecting this trade to return to this place, at least get to this high. So that's what we are trading right now. That's the reason we are calling this trade. So this is just one of many patterns. We have the M pattern, we have the W pattern, we have the cup pattern, cup handle pattern, and a lot of other patterns, and there are also trend patterns also. Do you understand? Okay, I think that's clear enough, right? That's clear enough. If you don't understand, you have any question, you can always drop in the comments section. So section. Now this is the 15-minute time frame, right? On the 15-minute time frame, see what happened here. See what happened. Let me zoom in. See what happened on the 15-minute time frame. So there's a trend formation here, trend line below, and it's been bouncing off this. You can see the blue trend, right? Bouncing off this blue trend, bouncing off this blue, bouncing off this blue. Then I spotted a pattern here, which I drew the trend on from here to this place. So this candle here, this particular candle, I think I need to take this out. I should move it from now. It's disturbing me. So this particular candle here, this one broke outside the trend. Normally I should wait for a retest of that trend line and a break back outside it before I finally buy. You understand? But since my overall bias is the buy for now, you remember the projection I gave yesterday, the buy projection I gave yesterday, it's still playing. So if I turn it up, if you go back to that projection, you will see it's still playing. It only took us out a week. But if it hadn't taken us out a week, we'll be in profit by now. Huge profit by now. So my overall bias is still a buy. As you can see, it's still respecting this blue trend line. So until it breaks out of this trend line, I'm not closing this trade. So you understand? I'm expecting it. But this could be a retest, and this could be a fake. Sometimes they are fake out, especially when the market is very idle. There tends to be fake out and manipulations and all that. You understand? So hence you begin to get a ranging market. So expecting this market to finally shoot up from here, from here. So that's it. That's the reason. I think this is clear enough, right? There was a breakout of this trend, this particular trend here. So normally I should wait for a retest before I enter there. You can see now it's looking like it's broken back, like it's going to go hit stop loss. Well, on 1 hour, let me switch to 1 hour. Network is bad. Okay, on 1 hour, I'm still holding for the buy on 1 hour because of the inverse head and shoulder and the higher lows it's been creating. Higher lows. There was a higher low here, higher low here, higher low here, higher low here. You get? So even if it came down here, I'm expecting this place to still reject it because this is the neckline. I'm not even expecting it to fall below this trend line, this blue trend line. So let's see where the 1 hour candle closes. The 1 hour candle closes in the next 26 minutes. So let's see where it closes. If it closes below this trend line, well, then that's a cause for alarm. Then one should be wary. But if it closes back above the trend line, oh, I'll just leave the trade and let it play out. Whatever happens after what I let it play out. But if it closes below, I'll cut loss because it could be a tendency for the market to begin to form, because I'm seeing another pattern here form. You might not see it clearly, but I'm seeing another pattern here form. I'm seeing a M pattern form. That's another pattern again. Let me quickly point it out for you. Here, the high neckline, go to this place again. Not exact. This. So you see coming down. So normally if this M is supposed to play out to break this place, once it breaks this neck, retest, then it falls to the previous low again. So my brother would call this pattern invalidating a pattern, and it's a strategy that always holds its structure together. Whenever a pattern comes to invalidate a pattern, the invalidation is always very accurate. So that's the reason I said if this breaks below this trend line, I am cutting this trade. But if it does not, once it breaks back up, I'm adding more positions. If it breaks back up, I'll add more position. Yes, and that will give me my complete 1:2. 1:2, just as we just projected on the 15 minutes. Give me my complete 1:2. Sheesh. Don't worry, forget about that psychological level. That's not something to worry about. I'm sorry, very sorry. So yeah, stop loss should be somewhere here. Be safe, respect the former week that took us out. But normally it should be here. This place is safe based on the fact that I'm entering on 15 minutes. This place is safe. Yeah, sorry, network is bad, very bad these days. I don't know why. Yeah, so that's basically it. That's all. But we're just maintaining this place to be super safe. So this is 1:2. Yeah, that's 1:2. That means you're risking $50 to get $106. Yeah. Or if I'm deciding to take it back up here, that means I'm risking $50 to get almost $200. So that's fair enough. Let's see how this plays out. Yeah, that's about it. Thank you. But mind you, this is where our stop loss is at. So maintaining a 1:2. Yeah, so let's not make this video so long. Thanks.